Hi, I'm Pankaj Gupta. Today's video is to examine stock market reward and returns. We are going to examine how much return we can get in stock market and what are the downside risks, or in plain words, how much profit or loss we can make in by doing investment in stock market. So I'm going to touch broadly 4 points. What are the chances of making money in stock market? How much money we can make in stock market? What are the downside risks, or how much loss can be how much loss can be there in stock market? And what if we get stuck in loss? Most important point, how to manage our losses. Okay, I'm going to present some factual data which will throw some insights in terms of how rewarding or how risky stock market investment is. Let's evaluate, or let's examine Nifty movement for the last 27 years. This is a table which shows Nifty movement from 96 to 2022, 27 years. This shows out of 27 years, Nifty have closed positive on a calendar year basis for 21 years, and 6 years it has closed on negative basis. This is calendar year closing. All data which I am going to present is on a calendar year closing basis. So if we do simple math, there are 80% chances of making money in stock market and 20% chances of making loss in stock market on a yearly closing basis. Now I think 80% is a fairly high probability, and taking a side which has 80% probability of making money, I think it's a logical decision. So that's the first point. What are the chances of making money? So data says it is around 80% chances of making money in stock market. Next point, how much money? If we make money, how much money? Now this is a table which shows Nifty's return for all those 21 years when it closed on positive basis. The highest return Nifty has clocked in a calendar year is 70%, more than 70%. I think it was 2009. Or in general, if you see 10% bracket range, so 6 years 6 years you got more than 40%, 3 years you got more than 30%, 3 years you got more than 20%, 3 years you got more than 10%, and 6 years you got less than 10%. The lowest positive return of Nifty is around 4%. So that's what how much money can be made. Now you can draw your own conclusion whether you make 10%, 15%, 20%, 30% basis this data. But I think if you want to normalize this number, expecting a range of anything between 10 to 20% is not a bad idea. Okay. Let's evaluate how much downside is there. We spoke about profit, chances of profit. We spoke about how much return can we get. Let's evaluate the other side also, which is how much loss we can get. So this table shows, again, this is all Nifty data for on a calendar year basis. This table shows 6 years when Nifty closed negative. The biggest loss or biggest fall in Nifty has been 52%, which was in 2008, Lehman Brothers collapse. Other than 2008, the fall has been capped to 20%. So 2 years Nifty has fallen more than 20%, 2 years Nifty has fallen more than 10%, 1 year it has fallen less than 10%. So you have 80% probability of making money. You have relatively higher probability maybe around 60% of making more than 15% or maybe around 20%, and you have a 20% probability of losing money, which will also fall into 20% if you get stuck in a bad year. That's about how much that's the downside risk. Or let's say barring a black swan event like 2008, downside risks should be capped to 20%. That too in if you are unfortunate and get stuck in a bad year. Okay. Now anybody can get stuck in a bad year. Anybody's assessment can go wrong. So what if we get stuck in a bad year? Most important point. This table shows Nifty's move on the next year when previous year has been a negative year. So broadly this table says whenever Nifty has fallen, next year it has recovered somewhere around 2 to 3 times of that fall. So 98, 18% fall, 99, 67% rise. 2000 and 2001, consecutive 2 years of fall, 15, 16%. 2002, small recovery. 2003, 70% recovery. 2008, Lehman Brothers, 52% fall. 2009, 76% recovery. So it goes like that. So broadly, this data shows it's a rubber ball effect. The more you push it down, it comes back with a greater strength. So in case you get stuck in a loss year, market is so efficient. If you stay invested in the long run, you will ultimately end up in profit. Now, how much profit you make, whether you make 5%, 10%, 20%, 30%, that depends upon broadly 3 factors, which are: what is your market assessment? Are you able to assess the market's move correctly? What is your investment strategy? What investment strategy you are following? And what is the strength of your portfolio? So these 3 factors, your market assessment, your investment strategy, and your portfolio strength, will determine how much returns you will get in stock market. So to summarize, higher probability of making money, lesser probability of making loss, profit is high, loss is lesser. In the long run, market is super efficient, it will normalize, and in the long run you should end up in profit. Now whether to invest or not, that's an individual call. I'm a portfolio manager. My job is to encourage people to invest in stock market. At the same time, I have a responsibility to show them the downside risks also. So I think this data explains or indicates in a very clear way how much is the reward and how much are the returns. Now everybody can draw its own conclusions and take a decision whether it's worth investing in stock market or not basis this data. So that's all for this video. Hope you like it. Any queries or any comments or any questions, please feel free to contact. Thank you. Thanks for watching.